Okay, so now this is the business plan format. Okay, starts off with a cover letter. Cover letter is a letter telling what you want to do, whether you want to apply a loan, or you want to get investor. Then the cover page, number two, is it? The cover page. The cover page, it tells you, it's just a title page, one page. Then you have the table of content, also one page, which tells you what are the headings. Okay, what are the tables, what page you have, all that is table of content. Then you have the executive summary. The executive summary is a one-page document. It's in the beginning. It's essential for convincing people to spend time reading more. And important thing you need to talk about is what is your service or product you're offering, market potential. Like remember we talked about cake shop, but this cake shop basically we are looking at how we can serve to people who are diabetic. There are millions of people in Malaysia who are diabetic. So talk about the potential of the market. It's huge potential, right? And then the project management, how you want to manage the project, and then what is the cost, how much the investor harus keluarkan duit, and then how much he can make. Very simple, one page, actually summary. Then the fifth one, number 5 is the main body. So we will cover the main body of the whole entire thing, which is tells you the administrative, marketing, operation, and financial. And finally is the appendix, where you have all the supporting document like supply quotation agreement, letter of reference, research finding. Okay, now let's look at the main body here. The main body first starts off with introduction. There are 10 sections in the business plan in the main body. Introduction, give you introduction of the company. I mean, name of the company, what type of business you are in, what is the profile of the industry. Okay, for example, you're talking about we are in the cake industry. So what is the profile? All right. So how many people eat cakes? What is the market? Is it? So how is it growing? So these kind of things is what you need to do in information. Location of the business. Where is your shop going to be available? Where is it going to be located? When you want to start the business? Okay, and why you choose that particular location and future prospect of the business. Maybe we want to grow, we want to book up banyak kedai like that. So the introduction will give you a short overview of the company, right? Second is the purpose. Okay, in the purpose, what you do is you will state clearly what is the purpose of this particular business plan. So you write, for example, this business plan is prepared by Naluri Jati for the purpose of obtaining working capital loan from RHB Bank for the amount of 100,000. Example, so this is the example. So from here you can actually know what is actual this thing, right? So don't worry about this. Don't need to take notes. I will give you the slides, you all can look at it. And I am also recording this part. I'm recording. So you can also listen back to the recording later on when you're doing your assignment. I'm recording this part. All right. Okay, next. Next, you talk about the company background. Right. Let's say now you have opened the company. What is the name of the company? Business address, correspondent, telephone number. What are the forms of business? Form 45, Form 44, all the forms that you have. And main activities, when you start, when the date of registration number, name of bank account. Okay? All this information on the company background you should provide. Okay. Then the next part is the owners and partners. Okay, now the owners and partners, here I highlight who are the partners of the company. Okay, for example, you say, okay, one partner is Joseph, the other partner is Sharul, maybe like so you write down the name, his IC, address, correspondent, telephone number, date of birth, age, status, academic qualification, skills, So all the information about the partner. Now, why do you need this information? Why do you need this information? Tell me, why do you need this information? Who is the partner? Who are those things? Sita?
Form 49, sir.
Yeah, why do you need this information?
To let know who is the shareholder of the plan.
Yes, because you are now, what's the purpose of your business plan? Is to go and get loan, right? Maybe a bank, or is it from investor? And they need to know who are the people who really own the company, who is behind the company. They really need to know. Maybe you are maybe just one partner, but who's the other partner? Maybe the other partner is sleeping partner, so they don't know. So you must clearly highlight all this information, right? Partner. Okay. Next is the location of the business. Okay. The location of business, you must provide what you call the physical location, building type, structure, condition, size, cost of the building, and basic amenities. So talk about business. If you are having a location, if you don't have a location, then it's okay. You can do an online business, then you don't have a location of the business, right? Okay. Administrative plan. Okay, now we will cover this more in detail in topic 8, but this is the basic parts of it. All right. introduction to the organization, in the administrative organization chart. You write who's the CEO, who is the accounts, who handle the marketing, who handle the thing. So the whole chart is there. Manpower planning. Manpower means, how many staff you're going to have for marketing, how many staff for production. If I want to make the cakes, I need to get a few baker, how many baker I need to get, So those things, you have a manpower planning. Schedule of tasks and responsibility. Write down who is going to do what job. Okay, for example, we start at the bakery shop. Okay, let's say, for example, Fadila is the CEO of the company, and then maybe, Sita is doing marketing, maybe, maybe, Sharul is doing something else, So different people, what are they doing? Okay, list of office equipment or other equipment. For example, you for baking, you need, what are the equipments you need, right? So list down all the things that you need. Administrative budget. Okay, you need a budget, right? By buying all these things and running the office, salaries, all those things. So in the administrative plan, the whole entire process, of the administration is listed out there. Okay. Then comes the marketing plan. Remember, we covered the marketing plan in chapter 4, right? What did we learn in chapter 4? Marketing. Sita?
4P.
We learned about the 4 Ps, right? Isn't it? We learned the 4 Ps. Then what else did we do?
Targeting.
We find out who is the target market. Then what else? Finally, what do you do?
Focus.
Focus. Very
Focus.
good. We learn about how to focus it. Now you are going to get a loan from a bank. So they want to know, how are you going to market this product? Okay, very good. Your cake is very good idea, How are you going to market this? They want to know, So you have an idea, or you don't know, you're clueless what's going to happen, So they want to know that. So what you do in your marketing plan, you highlight these things. Okay, what is the product you're going to do? So we are going to make a special type of pastry and cake targeted towards the people. Who's our target market now? Who's our target market? Fadila, who is our target market? Cake shop.
Sugar patient.
Okay, we are looking at, remember, a special type of cakes, targeting towards the diabetic people, So we have special type of sugar, So that's our target market. So then you look at the market size, So market size is how many people? So if you look and see in Malaysia, the number of diabetic people are maybe we have 30 million. I think they say 10% or 20% of them are diabetic. That means we are looking at something like 6 million people are diabetic. So it's a huge market. 6 million, is a huge market, right? Okay, and then you look at the competition. Is there any other people doing this kind of thing? Right? So maybe you need to look at who are the different competitors. And then market share. Remember, we look at how to develop them, how to come up with the market share. Do you remember? And then the sales forecast for January, how much, February, how much, sales forecast. And then the marketing strategy. This is where the 4 Ps, the 4 Ps come in, right? Marketing strategy, 4P, and then the budget. How much money you need to spend for marketing. And that is also very important because marketing is a cost. All right. So when you spend money, or you need to spend money. So how much you need to spend money on marketing is also you need to budget it out here in the marketing plan. All right. Then comes in operation plan. All right. So we covered this again in topic 5. Remember the process flow, material requirement, manpower, machine operation layout. Remember the different types of layout. For example, if you want to do a bakery shop, the layout will be what? Different types of layout, is it? What kind of layout can we have, Kim, for bakery? What kind of layout for bakery can we use? Remember, we had 3 types of layout: product layout, process layout, marketing layout.
The product. Marketing.
Marketing. All right, because when people walk in, they want to see your display, right? Isn't it? So it's a marketing layout. This is what they have to do. Right? Pardon? Okay, and then location, operation. So this is all covered in the operation plan. You must detail out in operation plan. Okay. Now, next comes the financial plan. Okay, we'll cover this in the next chapter. Financial plan. Okay. Now, the financial plan. What you need to do is you need to talk about how much you keluarkan duit to open. Let's say we want to open up a cake shop. Is it? So we need what? Maybe how much we need? Maybe we need 100,000. How much do we need? Kalau nak buka cake shop? Heriati, how much do we need for cake shop? Any idea?
10,000,
10,000.
20,000, 10,000.
Cukup ke?
100,000, sir.
I think anything also you need 100,000 sekarang lah, right? Isn't it?
Yeah.
So maybe you want to get a franchise, maybe, I don't know. Or maybe you can, you start out with one cake shop that is unique for, for people who are diabetic and those who are, health conscious people, is it? So So that's a big business, because by today a lot of people are health conscious. They want to kurangkan weight. You like to eat all the what they call what cake is very nice. What cake do you like to eat? What cake you all like?
Fruit
Huh?
cake.
Riyati?
Chocolate.
Oh, chocolate cake. You like chocolate cake. But then we think, you chocolate cake makan akan jadi gemuk lah, right? Isn't it? But how you feel if you eat chocolate cake and you don't jadi gemuk? It's unique in the sense that it is using ingredient yang what do you call doesn't what do you call this thing, is it? So it's called keto and all that. So if you can do something like that, there's a huge market. In fact, I also like, is it? Saya pun ada diabetes sikit, so I pun takut, to eat a lot of sugar. So it's a huge market, for people who want to have that, right? So now you need 100,000, but macam mana 100,000 dia allocate dengan cara macam mana? Untuk beli equipment berapa? Untuk sewa berapa? So you need to do an implementation cost schedule. How much you want to spend? Then second comes the source of fund. Source of fund means how much money is it going to be loaned? How much is the invested capital? Let's say three of us are investing to open up a cake shop. How much money you need to spend? Okay, so who are the investor? How much you're spending? How much you borrow from the bank? Fixed asset depreciation table. Okay, don't worry about this one. Fixed asset depreciation table, don't need. Loan amortization schedule, high purchase repayment. Okay, forget about these three things. Focus more on this one. Perform cash flow, profit and loss, and perform balance sheet. Now, in accounting, when you open any business, it's very important that you need to understand financial statement. Okay, if you don't understand financial statement, it's going to be very difficult for you. And even if you're not doing business also, let's say you're working for a company, it's important to learn it. When I studied my masters and I did my my business study, one of the most important thing yang saya belajar is this thing, accounting. Okay, because I come from a science background, engineering, not engineering. I from science background, so those who are mostly for engineer, science background, you don't have any basic in business study. So I find that, but when you're doing work and you're working for people, you have to understand, what is cash flow, what is profit and loss, and balance sheet, right? So three things. Now these three documents are very important for you. Cash flow statement, profit and loss, and balance sheet. We'll cover this in the next chapter. All right? What are the three documents? Apakah keperluan dia, and what is the importance of these three documents? You must understand these three documents. All right? Okay. And then finally, in conclusion, give a brief summary of the main content, the main purpose, and the close. How you close the whole entire thing. All right? Okay. And in the what do you call this is what do you mean by performer? When I say performer, mean projected. The word performer, write down. Performer means projected. Bukan betul-betul, because business ni kita belum start lagi. We are going to start the business. So ini just a plan, right? So when you do a plan, you project, right? Okay, this month berapa sale, next month how much sale, next month how much sale. Belum tentu lagi. Maybe you cannot, maybe more, maybe lesser, we don't know, but we are projecting. So that is called a performer. Okay, performer. Performer is projected lah. So for example, people send you a performer invoice. Have you seen that? Performer invoice, right? Isn't it? That means it's not betul-betul the invoice lah, but just a target invoice lah. Maybe it change later on lah. That's called a performer. Projected invoice lah. Right? Okay. All right. So these are the basic business plan, what they call format. Okay. Now, going back to the thing. So the business plan is a very important document, which really helps a businessman to understand. First of all, remember what is the purpose of the business plan? As a guide. It's a blueprint, for the business. So when the business starts, the businessman or the entrepreneur will know what are the steps to do. Okay. And then it is also what you call to see whether the business is viable. Now, sometimes what happens is once you do all the business plan, finally you find out that kita jadilah. Remember I told you the story of my friend, he wanted to do a GPS system. So we did the whole business plan, and then when it comes to the financial plan, then you find out, cannot make money lah. Cannot make money because we project a certain number of sales every month, 100 sales. We calculate and see, cannot make money. Why? Because too much expensive, too many staff we are having. Okay, our cost is very high. So then we sit down and replan again, and then check and see. Okay, I think it's not working. So we need to change something. So we change some factor. So we change the selling price. Right? Now this is useful because when you do a plan, then only you will know whether you can actually work. Because if he want to sell the product, the GPS for 300 ringgit, okay, 300 ringgit, he say very good, everybody can afford. He thinking is, I buy for 150 ringgit, I sell for 300 ringgit. Is it good or not? I buy something for 150, I sell for 300. Is it good? Is it profitable?
Yes.
Yes, it's profitable. Looks good, right? Isn't it? But then when you really sit down and run a business, you have other costs. Remember, there are other costs there, right? Isn't it? So you got marketing costs. Then some apa lagi costs ada?
Overhead.
Overheads, yes. You have to pay rental, you got to pay what do you call electricity, staying and all that, and you got to pay staff, right? Isn't it? So when you calculate all that, and they found out that 150 every unit, I say 150, not enough. You cannot make money, is it? So either what you need to do is what? Two things you can do. You can increase the, if you want to make more money, what do you do? Increase the
Right.
price.
Price.
Increase the price. Or what do you do? What's the next thing you can do?
Reduce the cost.
overhead
Reduce the cost. So I got to think and see, hey, which cost I can reduce? Maybe I cut down the stuff. I don't want so many stuff beginning. Then maybe later on I can add more stuff. So that's called a financial plan. Is it? You're planning yourself how you are going to do that, right? And then we found out, okay, I think we tweak it, we change it. This is what's successful, right? So in the next chapter, we'll cover more onto the financial part of it. Is that clear? Any questions so far on the business plan?
Clear, sir.
Clear, because this is going to be very important for you when you do your business plan. I want to see how you all do it. I don't want you just copy from somewhere. You can look at it, you can look at other things you copy, but then you modify it according to your own idea that you have. It is good that you think of an idea, a business, and do it, because tomorrow when really it comes to a time when you need to do business, you have something already there that you can fall back on. Okay. All right. So let's go to the next. Okay. This is the assignment I told you, right? Let me just cover the assignment a little bit, all right, before we go on. Now, in your business plan, you have to develop a local Malaysian company with not more than 100,000 and supported by not more than 10 employees. Okay. The business plan will operate under local Malaysian environment, complying with Malaysian business regulations, which means now you don't talk about doing business in Indonesia, doing business in US, I remember many years, last time I given this assignment to student, they download from US, and everything, all the information is all in US dollar, they copy the thing, but they never even change also, right? So please don't do that. Don't copy from the internet somewhere and the business is running in San Francisco, no. We're talking of a business that is done locally. It could be in Johor Bahru, it could be somewhere, but Malaysian company, right? Okay, not more than 100,000, set up capital of not, maybe 100,000 is okay, Today, 100,000 you need, any business you need 100,000, right? Not more than 10 employees. So that means something like a bakery is good, all right? All right, so you must emphasize the following issue, industry and competitor analysis. You must talk about what is the industry and what are the competitors, who are the competitors in your business. Business potential and viability. Remember you talk about it, right? What is the potential of the business? How you know the potential? Number of people they want to buy, you see? So multiply by the number of, this is a huge business potential. For example, if I am selling cakes, if I tell you that there are, there are 3 million people who are diabetic in Malaysia and they all want to eat cakes, you see? For example, if let's say one cake you sell for, let's say 10 ringgit, one cake, so 3 million multiplied by 10 is how much? 3 million multiplied by 10 is 300 million. Okay, 300 million. Of course, not all diabetic want to eat cake. Let's say, for example, we take 20%, 50% only will like to eat this kind of cake. So from 3 million down to 1.5 million. So 1.5 million multiplied by 10 ringgit, so it's also how much? 15 million. So this is how you calculate and see the business potential of that particular product, okay, that you're selling. Then you look at the competitive edge. What is competitive edge? Remember, we talked about USP. What is USP? Unique selling point. What is USP? Anybody?
USP.
Hello?
Price that we put to
Pardon?
price we give selling price to
I can't hear you. Unique selling point. What is the unique selling point of your, when I talk about unique selling point, what is unique selling point? Okay. Unique selling point means what is unique about your product. Okay. What is so special about your product? That's a unique thing. For example, now we are making a cake for diabetic people. Now, what's unique about us? we are different from other people. Because why? Ours, you eat how much also you're not going to become fat, you know, you see. You can have the sweet, but you know, you don't have the fat, you know, you see. So that's a unique selling point about our product. And then what is your niche market? Niche market is for those people who are health conscious people. Those who are not only diabetic, but also health conscious people also. You see. Because a lot of people today want to cut down weight. They don't want to eat fatty things. You see. So this is for what you call market niche, right? Then business strategy using a SWOT analysis. You do a SWOT. You know, you all know how to do a SWOT analysis. Strength, weakness, opportunity, and threats of the business, right? Financial management analysis. Now, this is what I told you. You know, we will look into your finance part. Okay, the next chapter we will cover what is the different part of the financial part, right? I think critical success factors or recommendation. What are the success factors? Now, these are the things that you need to have in your business plan, right? Now, next is quality of the business plan will be based on the following: idea, originality, and business creativity. You will see whether how original. Now, if you have an original idea, you get more marks. If you just do something like, oh, open up a cake shop, you know, which is normal cake shop or whatever, then maybe you'll just get normal only. But let's say a cake shop is something different, then maybe your original idea that you have. Okay. Detailed business strategy, thoroughness of research. Have you done research on this particular thing or not? All right. So look at your research. Realistic and local business implementation. Is it can be implemented locally or not? Right. That's the thing you got to do. I have another student one day. She wrote about supplying some what do you call some kind of what do you call cream, you know, which you buy from India and come, you know, and in Malaysia don't have, and people are looking forward for that, is it? So she wrote what do you call a business plan on that, you know, how the whole thing is going to work and things like that. Very good, a very good research plan, right? Detailed, realistic financial management consideration, structured flow of idea presentation. See, a structured, creative, and realistic recommendation. All right. So these are the things that I'm going to look at. Like, how original is your idea, and are you thorough in the way you've done your research? Okay. Now, to get help on this, refer to the lecturer notes. Okay. So these notes I will give it to you all. I'll give it in your Google Drive. Then you all can download the whole thing, right, down to you this thing. Okay. And then simple business plan. So you send me your WhatsApp me your number, so I will give it to you. Or I can give it to Ain also. Probably she can give it to you, send you all the link also. Okay, that is possible, right? Executive summary, company description. Remember this one, you know, you know, the strategy implementation, the plan, management team, financial analysis, right? Now, there's one part in your business plan. The management team is important. Now, why is it important? You must write about the management team. Why is the management team important? When you do a business plan, the management team is important. Why is that important? Anybody? Sita.
To know their position.
Okay, position, yes. Okay. Then what else is the thing?
Who run the business?
Yes, who run the business? Why I want to know who runs the business, and that's important. What is the reason?
Sustainability of the business.
Sustainability, okay. Yeah, all right. In a way, you're right. Is it? But what is the reason that I need to write down who are the management people, you know, is it? What is the reason? Anybody?
Structure the organization.
Okay.
Structure the company organization.
About this person is handling the marketing. This person is handling the operation. This person is handling the what do you call the accounting? Is it? So all these you write down. This is the structure of the organization, right? But why is that you know it's important to have a proper good management team? Good management team.
To manage the company.
Okay. Now you're right, because all of whatever you said is correct, is it? Now you need to have a sustainability, the business to sustain and to manage the company. Now, if you have, let's say, for example, I open up a company, you know, and let's say I'm selling burgers and all that, you know, and then the person, you know, my operation person is from operation is the ex operation manager of McDonald's, like, is that good or not? Let's say my operation manager for my company doing I'm selling burger company. The operation manager is from McDonald's last time. Is that a good credential? Is it good?
I think it's good.
Yeah.
Very good. Because we are looking at somebody
Yes,
who
past experience.
experience. So the bank will look and see, oh, this person last time working for McDonald's. Oh, okay, very good. They mean We are more confident. Kan? We want to lend money also, we think, hey, people are expert. So people will lend money not on your plan, you know. Remember this very carefully, yeah? People will not lend money based on your fantastic plan, a fantastic idea, you know. They will only lend you money based on your expertise, your management team. That's why when you go to investors, they will first of all ask you, who is your management team? That's what they'll ask you. Do these people know what they're doing or not? They have no experience in running maybe a cake shop, never put up what, you know, and then how are they going to do the business, you know, right? Let's say you want to open up an oil mill, you know, but never work in the oil business before, the palm oil, you know, how is it going to be? Isn't it true or not? So you need to look at the management team is very well. So people will invest in your management team, not in your business, not in your product or your idea. Okay, very important. Remember that they will invest in your management team. Okay. Now, tables and charts. Remember, we saw in the video that it's important to have proper tables and charts. It's very important to have that, right? And cash flow is the single most numerical analysis in our plan. Now, remember, cash flow is very, very important. Because why is cash flow important? Why is cash flow important? Why is cash flow important? Cash flow.
Make
It's
sure
like
our
moving.
financial is running well.
Yes.
And
Now,
rolling.
most the businessman or entrepreneur will die after 1 to 2 years' time because of they cannot manage the cash flow. All right. So if I'm an investor, I want to know whether you got cash to run the business or not, whether you got cash to pay me back or not. If I'm a bank, let's say I'm working in a bank and I'm giving loan, I'm looking at a business plan. I want to give loan to business line. I want to see whether end of the day you have cash to pay me or not. If you're running business, if semua pun atas credit, atas 30 days, 90-day credit, then you'll be stuck also, right? Okay. All right. So, and then this is what your business plan, expanded plan is. Assignment, UMP cover page, the cover page, cover letter. Start with the cover. Remember, cover letter. The letter is to who are you giving this thing? You're going to get a loan. Remember, what is the purpose of this thing? To get a loan. Prepare one fictitious business plan for submission of business loan application for 100,000. You want to borrow 100,000, right? That's the thing. So in your cover letter, you write, you know, this the purpose of this is for us to get a what do you call this thing? Then your cover page. Remember the cover page? We talked about what is the content of the cover page. Table of content, executive summary, 1 page. All these are one page. Then you come to the main body: introduction, purpose, company background, owner background, location, business administrative plan, conclusion. All these things. Remember, we looked at it just now. And then the appendices and references. If you want to add, you can add these things. So these are basically the what do you call the content, the structure of the entire business plan. Then you come to the what do you call instruction? What are the instructions? First of all, font is Times New Roman only. Okay, all of you, when you write, use a Times New Roman. Don't use different kind of a thing. All use Times New Roman. Heading is size 16, bold and capital letter. All the headings are capital letter.
Sorry, sir.
Yeah.
Font only Times Roman only,
Pardon?
Times New Roman only,
Yes, only. Only Times
Only.
New Roman.
Okay.
So this is basically what they've given. Right?
Alright.
Subheading is 14. Text is 12. Size 12. So follow this one very strictly. Page number on the bottom of the page, center. In the center, not at the side, you know. Spacing between line is 1.5 spacing between paragraphs. You know, spacing between paragraph is 2, but between each line is 1.5. Okay, so these are the things. So please stick to this clearly, you know, when you're doing your what do you call the assignment. Is that clear? Right. So I've covered the assignment. The assignment carries
Clear, sir.
60 marks, right? So I will give you the slides. You can go through it again, you know, and when you want to prepare your what do you call it, this is more detailed, you know, for you, so that you can do that. All right. Okay. Now, is it time for a break or what? Can you take a break, maybe? Yeah. Hello.
Yes.
Yes.
Can.
Give a 5-minute break, and then we come to
Yes,
the final.
sure.
Yeah, yes.
Right.
Thank you,
Yes.
sir.
Okay, thank
Okay.
you, sir.
Okay, sir.
Stop this one, Okay. All right. Okay, now we're going to go into the next chapter, which is the financial plan. Okay. So remember, we looked at the financial plan. Okay, the financial plan is the almost the last part of the business plan, right? Is the in the previous topic we are talking about the business plan, all of the different steps of a business plan, right? And we looked at marketing, we looked at operation, now we're going to look at the financial plan. What is a financial plan, right? Now, financial plan is one of important part of the whole entire business plan, because that is what outlines to you how much to invest in the business. If you want to open up a business, what is the cost? Okay, how much is the money that you spend, to implement the entire project, is it? So the financial plan, we're going to look at these things. We're going to look at the project implementation cost. That means what's the cost to implement the project? The source of funds. Source of funds are where the money is going to come from, how much investor going to pay, how much bank loan we're going to get. All those information is highlighted here. Okay, and the fixed asset table representation means what are the fixed assets, what are the loan amortization schedule. Okay, I mean, if you're taking a loan, how much are you going to pay off the loan? It tells you the structure, how much every month you're going to pay, if it's relevant. Hire purchase, that means, for example, you're buying some cars, you're buying a van, you're buying some thing, you have a hire purchase. What is the schedule of payment? How much you want to pay every month? So that is also highlighted there in the financial plan. Then you have the performer. What is performer again? What do you mean by performer?
Projection.
Projected. Okay, so you're projecting the cash flow. For example, cash flow, we'll talk about how much cash come in, how much cash go out. So what is the cash coming in? How much is in the bank? How much is the gone off? It tells you the cash. So every month, your cash flow you do for every month, every year also you do. So that means every month you look and see so much of cash is coming and so much of cash is gone out, and then how much cash is going to be balanced, right? Okay, so this is how you calculate that, cash flow. And then you have the profit and loss. Okay, profit and loss, P&L. Okay, profit and loss statement. And then you have the balance sheet. Now, the profit and loss is also called the income, statement, right? And then you have the balance sheet. Now, these three, I told you earlier, are very important. Three different statements are very important. And as management people, not business, as a management people working in management, you need to understand that you don't need to do P&L, you don't need to do balance sheet, but you must be able to look at the balance sheet, look at the profit and loss, and find out and tell me whether this company is making money, not money, is it good or not to invest. It's very important for you all to understand that, right? So those people basically in banks or other financial institutions, they are taught to understand when company requests for loan, company asks for loan, you can look at their cash flow statement, all that, and find out whether the business is going to do well or not. Okay, so understand that.
Developing the
Okay, watch this video. It talks to you about what are the things that you need to do to develop a financial plan.
Developing the financial projections for your startup may seem a daunting task. After all, how can you know what type of revenue and costs your business will encounter in its first year of operation, let alone the first 5 years? Putting the projections in the plan and presenting it to funders also seems so final, as if saying you promise stand by these numbers. How can this be the case when you feel extremely uncertain about the projections? In this video, we are going to share 6 major components of financial projections for startup. 1. Financial goals and objectives. Every startup owner wants to make as money as possible from those startup. But how much money do you really need? What are the financial goals you want to achieve with your business? You need to write all of your financial goals and objectives in your financial projection. 2. Income tax planning. Ignoring tax planning is very common among many small business owners. It is not an optional process, so be sure you are on the correct path when dealing with your taxes with the help of a professional, who will help you through the ongoing process that helps small business review their total income and manage the expenses every month. 3. Balance sheets. The balance sheet boldly declares where a business stands at a given moment in time. From the balance sheet, a financially sophisticated reader can learn an immense amount of valuable information about a business and its viability. That is why potential investors and lenders will almost always ask you for a copy of your financial statements, including the balance sheet, income statement, statement of retained earnings, and statement of cash flows. 4. Risk management and insurance. No matter the size or nature of your business, one thing that remains the same is the need for business insurance. There are many different aspects of your business that you want to take into consideration when looking for new business insurance or reviewing your current insurance coverage. 5. Cash flow statement. In financial projections, a cash flow statement or statement of cash flows is a financial statement that shows a company's incoming and outgoing cash during a time period. All three statements are arranged from the same accounting information, but each statement serves its individual function. The statement of cash flow reports the movement of cash into and out of your business in a given year. And 6. Investment planning. Investments are all about working out a particular financial projection so that you can get from one place to the other. It is precisely due to this investments are known as investment vehicles. Investment planning is a must if you want to reduce the risks associated with losing money that you earned from your business. Only a solid plan and financial projection will ensure financial success in the future. If you found this video helpful, then like, share, and subscribe our channel to get future videos.
Okay, so what did you learn? What are the important things in the financial planning? What are the important things? Okay, so we looked at a few things, and in fact, he mentioned the financial statements are very important, right? But among all the financial statements, which is the most important financial statement? What's the most important financial statement?
Cash flow.
Cash flow.
Cash flow, cash flow.
Cash flow statement is very important. Okay, so we're going to look at these three statements and why you need this type of three statements. Okay, so financial planning involves total project cost. That means the cost to set up the business. Tell you how much you invest on equipment, on rental, this, that, all that on raw material, everything. You talk about project cost. First, you got to say that. Then choice of funding. Where you want to get, is it loan or equity? When you say equity, what does equity mean? When I say the word equity, what is equity? Okay, write down this. Equity means share capital. Okay, so let's say, for example, Mark and me, both of us are joined together. We want to open up a factory, maybe, manufacturing some product. Okay, so when you do a business, you take out money and put in, right? Isn't it? Mark, your own business, how much money did you put into your business?
500,000. 500,000.
500,000.
Yeah.
Wow. Okay, that's huge amount of money. That is called his equity. All right, his equity. Did you take any loan from banks and all that?
Yes.
How much is that? Here's the figure. I mean, you don't have to exactly tell me, just
300,000.
300,000.
300,000.
Okay, 300,000. So loan is 300,000. Equity is 500,000. So this is what he call is source of funding. How you want to think, right? Equity is your own share into your business, right? Okay. Then you come. The third part is the financial projection. That is, remember, cash flow statement, income statement, and balance sheet. Okay. Now let me ask you, why is it you need three statements? Why not one statement? Why you need three statements? Anybody? Why not one statement?
Different.
Yeah, different. What is it? Tell me. Good.
The source of fund comes from various places.
Sita, are you familiar with the financial part?
Maybe different calculation and different profit and loss for the year.
What does it mean? Tell me, give me an understanding why you need these three things.
Cash flow by year. Cash statement can be by month.
Okay. All right. Okay. Let me explain to you.
To give the analysis of the financial ratio.
Okay, ratio is a different one. Next is the ratio is another one. Is it? So it's not a real thing. So actually, cash flow statement gives you what is the flow of cash coming into your account, right? Income statement will tell you what's the profit and loss. Profit and loss. Balance sheet will tell you what is your asset and liability. I mean, liability means utang. Liability is utang. Write down the word. Liability maknanya utang. Liability. So asset and so on. So each of these statements will tell you look at it from a different part angle. Macam you ambil gambar kan. Let's say you ambil gambar dari ini sudut ini, lepas tu ambil dari sudut ini, lepas dari sudut ini, 3 sudut. Jadi, this is what a statement is. Because sometimes you look at one statement, it won't tell you the whole story. You see? Because a profit and loss sometimes cannot tell you the whole story. People can show I make profit. Can it be possible that I make profit but I got no money? Is it possible? Let me ask those who are doing business like, is it possible to have profit but no business? No money. Is it possible?
Not possible, sir. No.
I can show you my business profitable, I can make a lot of money, profit, is it? But I have no money. Is it possible?
Impossible.
Impossible. Okay. All right.
Impossible.
Now it is very possible. You know why or not? Okay. Now the example is like this. Right. Let's say, for example, let's say, for example, let's say I give you a simple example. I write on this slide. Okay. So let's say, for example, I am selling Acon. Let's say I'm selling Acon. I'm selling Acon. Right. So I'm selling Acon. My company is selling Acon. So what I do, the Acon is I sell for how much? Let's say 1,000 ringgit. 1,000 ringgit I'm selling Acon. Right. So now the Acon I buy for how much? Maybe 500 ringgit. I buy it for 500 ringgit. All right. So what's my profit?
500.
500, sir.
Okay, 500. Of course, I got expenses, office expenses, traveling, this, that, all that I have, right? Isn't it? So how much is that? Let's say, for example, I put that in maybe 1 year. This is fixed, right? Isn't it? It's a fixed expense line, fixed expenses line, So let's say 1,000 line or 1 month line, Fixed expenses is 1,000 line, All right. Now let's say, for example, I have a sale. I have sale now, I went and sell. I got a customer, So the customer buy my product. How many? Let's say he buy 100 Acon, 100 Acon. So how much is my sales now? What is my sales? I sell 100 Acon.
100,000.
100,000, sir.
So now is what? 100,000. Okay. Is that clear? 100,000. So sales. Now I got expenses, right? We call it cost of goods, Cost of goods. Cost of goods means what? They mean I got to pay the supplier, right? How much is it I must pay a supplier?
50,000.
50,000.
50,000.
I must pay 50,000, right?
Yeah.
All right. I must pay 50,000. Okay. So I got fixed expenses 10,000. So what's my profit?
40,000.
Profit is what?
40,000.
40,000. Okay, so I am 40,000. Okay, am I profitable or not?
Yes.
Yes.
Yes, profit, right, isn't it?
Yes.
But I'm sell to big company, and they don't pay me immediately. Normally, when you sell, they give you how many days credit do they give? Those of you in sales and things.
90
days.
90 days. 90 days.
90 days credit. So that means now what? 50,000 I take out and pay the supplier. Supplier will tell me, hey, sorry, you have to buy So what I do, I got to pay 50,000, right? Okay. So doesn't matter. I got 50,000 in my bank account. Start the business. I got 50,000, so I take the 50,000 my saving. I go and pay, and then I make the sale. Okay, I'm waiting. I won't get the money now. I get when? When will I get the 40,000? When will I get the money? Profit of 40,000. When I'll get? After
90 days.
After 90 days. Okay, this is what month. Let's say, for example, this is January line. This is January sales line. This is January. Now what happened was, let's go to February line. Okay? So let's say, for example, February. February also a very good month, very good sales now. So February also I make money. Okay, so February also I do the what do you call the sting line. So let's say, for example, same February also I have sales now. February also I have say 100,000. Okay. Cost again 50,000 I have to pay supplier. What's my fix? Again 1,000 I got to pay in February lah. Profit some more again 40,000. But now I have to pay the supplier money, right? Where do I get the money? How much is my bank now? When I start the business, I got how much inside the bank?
50,000.
1,000.
So let's say I have 50,000 in the bank line, RM 50,000 in the bank line, So 50,000 is for my saving to start the business line, in the bank. In the bank, I have 50,000 line. So now I got what? Now I got what? How much money I have in the bank now?
0.
Hello?
110,000.
How come you 110,000? January, I started the business. I started with what? 50,000 in the bank, right? Isn't it? So I borrowed from somebody.
80,000.
My uncle give me 50,000. I put the 50,000 in the bank. I started a business. I opened up a shop selling aircon. So I sold aircon. First month, January, very good sale. I got 10 sales. I have 100 sales. So I got 100,000. Is it? 100 sales. So I got 100,000 sales. Cost of goods is what? 50,000 fixed expense, so 40,000. So I took out the 50,000 in my bank and I went and paid the supplier. Okay, but the supplier said after 90 days, what he will give me. Now the second month also I got a good sale. 100 set again, 100 sale. Cost of good again 50,000. I had to pay a supplier. But how much money I have in the bank now?
No money, sir.
Huh?
No money.
80,000.
80,000, sir. Profit, right?
No
Is it
money.
profit?
No money.
You don't
Profit.
have money.
No money.
I got no money because I already paid the supplier already, right? Isn't it? I haven't got the money from the sales, is it? I haven't got the money from the sales, is it? So where do I go and get the money from?
Loan.
Okay, I got to go to the bank and tell them, look here, I don't have money, is it? So the bank asks you, are you profitable? Is the company profitable or not? Is
Yes.
it big profit or not?
Yes.
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 Yes, it's making profit. How much profit they're making? What? January, very good. 40,000 I make, profit, I'm a sole proprietor, I'm the only businessman. So I'm making, what do you call this thing? February also, I got 40,000, I got sales line now. But I got no money. Right? So there can be a situation where a profit and loss statement cannot tell you the story. Cerita, tapi cerita betul tahu. Sebab profit, oh bagus, profit bagus. Tapi ada cash kata dia. Ada cash. No cash, is it? So this is a scenario that we can have actually, is it? So that is why we need 3 different types of statement. That is different sudut you tengok. One you look from it, profit, okay, good. That means sales is good. The other sudut cash, now kalau they say I draw a cash flow statement di sini, macam mana cash flow statement look like? Cash in is berapa? Cash out is berapa, is it? So let's say I do a cash flow statement. Cash flow statement macam ni tau, let's say for example a cash flow statement. Okay, so let's say cash flow, cash in is berapa? Ben January berapa cash dalam bank saya? Cash in berapa?
100,000.
Berapa dalam bank saya? In January?
50,000.
50,000. Remember, I have 50,000, right? I have 50,000 in my bank when I start the business. I borrowed from my uncle, right? So now in January, we are looking at cash flow. Cash flow statement. Cash flow now here. This is cash flow. Cash in is 50,000. Okay. How much you pay out? Cash out.
50.
Cash out. Also 50.
Yes.
I paid the supplier, right? No lah. Actually 51,000. Do you remember? How about fixed asset? You forgot about
fixed
the fixed
expenses.
right, isn't it? So you all forgot about that. So 51 must pay the staff, must pay this rental gun. Otherwise the bill will come, So net cash is how much? Net cash mean? Berapa cash sekarang dalam poket? Net cash is what? Minus 1,000. Kan? Minus 1,000.
39.
Minus 1,000, right? Isn't it?
Yeah,
So now
minus.
minus, right? So now let's look at bulan February. Okay. Bulan February, another one again. Cash in, how much? Cash in is how much?
No cash in.
Minus 1,000. I mean, it's not cash in. Actually, it should be brought forward, like cash brought forward. BF, brought forward. They mean from last month ke this month berapa sekarang kita ada lah, you know. So here also cash brought forward lah. Okay. Cash brought forward is 1,000. Okay. Cash brought forward minus 1,000. Daripada sini kan?
Negative, ya.
Ini January punya. Jadi so 1,000 cash forward. So but 1,000. So cash out kena berapa kena bayar? Let's say we borrow from somebody else. I go to my second uncle, you know, and I borrow 50,000 from him. So now is what's the net cash now?
49.
51,000. Which means now you look at my cash situation. Profit very good, isn't it? Profit is 40,000, 40,000. I made how much? 80,000 already. You know, kalau you kira 2 bulan, you know, dah 80,000 already. But what is my cash statement?
Net.
Is it good?
Negative 51.
Negative 51, you know, negative. No, normally negative you put minus or sometimes you put bracket, you know. Some people they put bracket lah, you know. I think this is the norm lah. When you put bracket mana ni whenever bracket means you hutang people lah, you know. They mean they dah kurung you. You know, when you put bracket mean dah kurung lah. Kita dah kurung. So now you are what? Negative 51,000. Now look at the story now. Gambar ini tengok gambar ini. Dari sudut ini kita ambil gambar, does it look good? Is it good here? So you talk about total, they mean total for 2 months.
Yeah.
Total looks good, you know, 80,000, you know. Daripada both way you look and see, wow, looks very good. But daripada sudut ini kita tengok apa? Not very good, right? So
Healthy,
if let's say now, if maybe I borrow from Along, you know. So Along said 1 month you don't pay, you know, very high, you know. This is what happens basically in businesses, you know. This is the reason why many businesses get stuck. You know, we call it what we call death valley, okay, because of cash flow. So cash flow is very, very important, and that's the reason why most of the people, when you want to get a loan, they'll ask you for your cash flow statement. First thing is cash flow statement. They'll ask you. All right. So when you are doing in a business, you haven't started yet. You got to do the projection. You got to say, January I will make how many sales. February berapa sale. Dan daripada sana, we calculate the cash flow that is coming inside because you got to pay off the supplier, then you got to pay off the one. So you calculate the whole time, right? Okay, so this is basically a important this thing. So the cash flow is very important. Then you have the profit and loss. Then you have what you call the balance. A balance sheet will tell you how much you have as asset, how much you utang. Okay, so that will tell you the whole entire story of your assets and liability kind of story. All right. Okay. So this is basically is that clear with you all? Why we need the statements? Is that clear?
Yes, sir.
Okay.
Clear,
Right.
clear.
So later we are going to look at some examples of all these cash flow statements, right? Okay, we looked at financial, the most crucial. And when you prepare this, you know, you need to have all the other budgets coming in. Budgets means you're talking about all the forecast plans like sales from forecast. That means you must know how much sales you want to do. Maybe January, how much sales you want to do. February, how much sales you want to do. Daripada sana baru you boleh kira tau, you know. And then administrative budget, administrative mana dia? How much money you want to spend for employee salary, how much you want to spend for all those things. And then operation, running the operation, raw materials, buying, you know, all those different, what you call projection, you join together, then only you can prepare your financial plan. So before you do your financial plan, you must have this information. What is the sales going to be? Okay, you got a target line. Remember, we looked at the what do you call keropok, right? We need a sales forecast. Kan? Daripada sales forecast, you know, January kita buat berapa sale, February berapa sale, and then okay, bulan Ramadan, okay, kurang sale dia, kurang, you know. So kita buat forecast macam ni. Daripada forecast ini, kita ambil ini, petik dia, and masukkan, and then develop the what do you call the financial plan, right? And also the salaries, administration, organization, staff, salary, all those things, EPF, so everything you must dari pada sana masuk ke sini. All right. So and then these three budgets. So these are the three important budgets you have to have. All right. Clear? Next, financial statement will give you the same thing, So it tell you about operation budget, financial budget, and projection. Cash flow, income, and balance sheet. Three different statements. Pro forma, we already know what is the meaning of pro forma, right? Okay, now why you want to do a financial plan? Because the size of the investment. First of all, you want to know when you do the financial plan, you know how much money you need to take out, in order for you to do the thing, is it? And whether you got enough to cover for contingency. Contingency means something that you never predict, tiba-tiba akan jadi banyak COVID-19 or whatever kind of thing, right? Identify the relevant source of finance. So when you do a financial plan, you'll know where the money is coming from. For example, after you do the plan, you find out that okay, let's say for example you want to invest equity 100,000 I want to put inside. Okay, maybe loan I want to take 100,000 But once you do the financial plan, you find out and say, tak cukup lah. Is it? So a financial plan will help you identify what are the relevant sources of finance. Maybe cukup ke tak cukup, but you can find out from there. Is it? Okay, then to ensure that the initial capital is sufficient. Sorry, this is the one. Whether your capital is cukup ke tak. And then to appraise your viability. When you look at it and see and calculate and see whether is it profitable, whether the business can be profitable. Remember I told you when I sat down with my friend, we did the financial plan. I did the cash flow statement. I did the P&L. Both of them I did together, Then I found out, hey, you cannot make money, from here. Is it? So either we need to decrease the cost or we need to increase the price of selling price. The two things we got to do. Is it? So this is how or maybe you get a supplier who can give you cheaper. Look for another supplier. So what we did, we had to look for another supply from China, We were getting the product from India. So we thought, okay, better look for China. And we're looking for another supplier in China whose price is cheaper. So maybe then it's more viable. The business looks more viable, right? Okay. And it's a guideline for implementation. So this is why a financial plan is very important. Okay, 7 steps. You're going to look at the different steps for developing the financial plan. Step 1 is gather all the financial input. Remember, I told you it depends on 3 things: marketing, operation, and administrative plan. 3 things. In order for you to develop it, you must have these 3 things coming in at one time, right? Then prepare the project implementation cost schedule. Project implementation cost schedule means it talks about to implement the thing, what is it you need? Machinery, how much? Vehicle, other things, salary, factory overhead, raw material, inventory, all those things that we really need in order for us to start our business. Implementation is called the implementation cost schedule, right? So that's a name for it, okay? Then you need to look into prepare. These are all the things. Capital expenditure, working capital. Working capital is the money that you need to run your business. It's called working capital, right? You have capital expenditure what is capital expenditure? Capital expenditure is for buying machinery, and capital goods, right? Office equipment, those are called capital. Then working capital is like, for example, running the business. For example, everyday salaries, wages, raw materials is called working capital, right? Then other expenditures, like for example, insurance and stuff like that. Contingency costs, suddenly there's a blackout, some other kind of thing, suddenly some disaster, you have to have some contingency costs. Depreciation schedule for fixed assets. Okay, these are the things that you need to come up with the implementation schedule. Then you have, okay, look at this. Okay, look at this schedule. Now, what is this schedule? Look at it and tell me what is this. What business can it be? Hello?
Property.
Property. What do you think the business is?
Factory.
Yes, very good. It's a factory. Okay, understand it's a factory because you see, you got land and building contributed by owner. That means owners maybe his own business but then they charge 45,000 for it That's the cost of the whole factory Machinery and equipment. So it definitely is a factory. There's some machinery there. Either they're manufacturing something, and equipment for that. So 23,000 for it. Furniture and fixture, 7,000. Okay. Vehicle. Oh, they mean they're going to supply something. They mean they're manufacturing something. At the same time, they are also what you call getting a van, and when you buy on hire purchase. Okay, hire purchase means the cost of the van is 25,000 lah. When is this? But mana boleh beli van 25,000? Ni lama lah dengan lah, is it? 35,000 cannot buy a van lah, is it? Then renovation cost is 4,000. Okay, so totally how much is the capital expenditure? 104,000. Okay, now capital expenditure is something what I told you is fixed expenditure. Maknanya dah buat lepas tu you cannot get it back, is it? Is it? So that is called capital expenditure. So all these are all sunk costs, right? Then you have working capital. Remember working capital for 2 months. Now normally when you start a business, you have to have capital for 2 months, 6 months. Now depending on the type of business. Some business you can get money immediately. Macam okay, let's say sundry shop. Hari ni buka, esok boleh dapat cash masuk. Betul kan? Is it true? Right? But in some businesses it takes time. Like for example, I told you my example of selling aircon. It takes them 90 days for them to get back the money. So what is he going to do? You'll be stuck for the next couple of days. So when you do working capital, you must have enough money. When you start a business, you must have enough money for 3 months or 6 months, So in case nothing, no business daddy, you should have kira for all that line. That's called working capital line, right? That's called a working capital, right? So marketing, you have expenses for marketing, 1,500 for 2 months. Operation production, 8,000. Administration is 8. What is administration? What comes under cover administration to apa? Huh?
Clerical work.
Huh?
Clerical work. Clerical work.
Medical worker. Clerical worker.
Clerical.
Clerical. Okay. So what does it come? What is under? Kalau cakap 8,000, 8,000 is for what actually? Administration is what? What do you mean by administration there?
Running office.
Running the office. Very good. That means salaries, right? Paying salary, EPF, SOXO, all that is called administration. So I mean 8,000 ringgit in every month. So this is for 2 months. Like 1 month is 4,000. Okay. So that means maybe you got 1 staff, 2 staff only lah, right? Operation production. That means running the machinery, what do you call all those kind of things, operation production, raw materials, all come under here, raw materials, all that come under here. Marketing is advertisement, right? 1,500. Other expenditure, remember, pre-operating, they mean before you operate, business registration, 2,000. Insurance, remember, they mean what company is he opening up? Tell me, what company you think is this? Is this a sole proprietorship? Is it a Sendirian Berhad? What company is this? Hello?
Yeah, Sendirian Berhad, sir.
Yes, Sendirian Berhad. Very good. About 2,000 line. Insurance, road tax. Road tax is for the car, van. Then sundries, 100. And deposit. Now, some are deposits in accounting, you put deposits separately because deposit is something that is your money, you give it to them, they will give it back to you. So deposit. So the telephone, electricity, all that you have to pay a bomba, all those kind of things, you have to pay deposit for them, right? So grand total is 125. Contingency costs, something happened, you don't know what can happen in the future. So you add 10% to 12,500. So what is the total cost of business? What is the total cost here? 137,000. So this is called the project implementation schedule, right? In your financial plan, the first part of your financial plan will have your project implementation. If I want to start the business today, what are the things? Capital expenditure, mean land, building, furniture, all that. Second is working capital. They mean in order for the business to bergerak, I need how many? For 2 months, 3 months, 6 months, you can put it for 6 months also can, is it? What is the marketing, operation, administration? You write that down for working capital. Then is other expenditure, right? The business registrations and all these things, okay? Now, this is the total. So, for example, if you go to a business funder, bank, and tell them this is the amount of money I need 137,000, right? Now, out of the 137,000, maybe not all is going to be your own money, right? Isn't it? So, maybe it's going to be what? Here, look at this here. 137,000, it's not all bank money. How much is the borrow from bank? Remember, I told you there are two things, equity. What is equity? What is equity?
Share.
Share. I want all of you to listen carefully because this is going to be a part of your assignment. Share your own money that you put in. Now, how much is these people putting in the business? How much money are they putting in?
72,000.
Yeah, they're putting in 72,000. Out of it, 45,000 is his own land lah. This guy's own land, 45. So 72,000 is putting in his own money inside. How much loan he wants to get? How much loan?
Is it 65,000?
65,000. Out of which 20,000 is a high purchase for a van. Remember, you're buying a van, right? And then the term loan is what? Term loan is you're borrowing from the bank for your business line, right? So totally, this is the schedule. So this is a source of funding. Remember the second part, you prepare the source of what do you call it? So it can be internal, external. Internal is your own. This is internal, this is external kind of thing. All right. Now we looked at, first of all, step one, all the financial input you must get, right? And then you look at the implementation cost schedule. What is the cost? The three parts of the cost schedule. Remember, you talk about the capital expenditure. They mean buying land, machinery, and all that. Then is the operation. When you want to operate the business, so what are the things that you need, right? And then now third, you look at the how are you going to break the 137,000? How are you going to pecahkan? Berapa equity? Berapa daripada what do you call bank loan, right? Is it clear, all of you, when explaining this thing? Is it clear? Hello?
Yes.
Very clear, sir.
Yeah.
Very clear.
Very
Yes,
clear.
sir,
So
clear,
anybody that
clear.
don't understand, you just stop me. I can
Yeah,
explain,
very
right?
clear, sir.
Okay, so get this. This is very useful for you, not only for your study, but also for your own business. Tomorrow you want to do your own business, you have a clear understanding of what actually the whole entire system is, how to set up, what are the accounting things you need to know. You don't need to sit down and study accounting, not necessary. Okay, you just understand the basic tak boleh faham sudah. How to do it. Actually, after this course, you should be able to look at somebody give you account. You boleh tengok and tell this business good or no good. You should be able to tell, because you studied okay. Next, let's look at the next part. Next is the pro forma cash flow. Remember, we talked a lot about cash flow, right? Isn't it? Now, cash flow is one of the most important things. So now cash flow comes in first year detailed by month, second year detailed by year. Okay, 1 year, 2 years, 3 years, like that. Okay, so this is how the cash flow statement, right? Now, your cash flow statement will tell you inflow, cash outflow. Remember, you saw cash come inside, how much the cash go out, cash deficit or surplus, right? And cash position, the beginning and the ending cash. Okay, the statement will tell you this. Okay, now we're going to look at this is a cash flow statement. This is the monthly one. Now, look at this and tell me whether this is good. The business is good. This is the same business, they're starting the 137,000 into that. Now, look at this thing. Is this good here? I mean, when you first start off a cash flow, equity cash. What is equity cash?
Share.
What is it? Share. The share money he put in. Remember earlier we saw, right? Developer put in 27,000. 45,000 is for land, So that one you cannot. It's not cash, right? It's asset. Now he put in what? 27,000. He put in cash. Term loan, need loan daripada bank. So now how much he has total cash inflow? 72,000 to run the business. Okay. Now listen to me very carefully. Go through this thing. Down, he put 5,000 down payment for what? Car, the van. Capital expenditure is 23,000. I mean, from here is where he's going to pay all the money. Remember, equipment 23,000, furniture 7,000, renovation 4,000. Pre-operating expenses is 2,700. All this. Remember the first part we saw, all that is here in this part. Okay, the money he take out to go and buy all these things. Remember this, to buy all these things. Remember these things, all the money to go and buy all these things. The first cash that come inside. So cash flow. So first month, banyak duit. Pre-operation line. Then January, we start the business. January, cash sale. Now, 20,000. Where you get this 20,000 from? Cash sale. Mana dia dapat 20,000? Hello?
Sales.
Hello? Sales.
Sale.
Is this a projection or what? Hello?
They
Yes.
sell.
How do you know 20,000 cash coming?
Projection.
It's a projection. It's a projection. He's not sure, but this projected in January. I start the business. I should have dapat 20,000 sales, and these sales are what? cash coming, not credit, not 90-day credit, it's cash coming into the account, They think of 20,000, cash is coming in. So how much is total cash inflow? 20,000. Okay. Now he's paying commission. That means he's selling something. This company is selling something, ada commission kepada salesman. Entertainment allowance, wah, banyaknya. Entertainment apa? Entertainment dia pergi buat 500 ringgit lah, entertainment. Raw material, seperti 3,000. All this he pay cash, Sales, salary, wages, EPF SOXO, administrative overhead, 2,000. I think how many salaries, maybe 2 staff they have. Principal, loan payment. Loan for what? What loan is this?
Car,
What loan is this?
hire purchase.
No?
Term loan.
The term loan,
Term
the
loan.
money that he borrowed from the bank, he paying back installment every month. Interest, see, they put it different. Can you see or not? Principal and interest are different. The reason is why they do this is like this, In accounting, if you take a loan as a company, you can minus off this amount, the interest from your income tax. Tax deductible. It is tax deductible. That is why companies like to take loan. You know why not? Because whatever loan you take, that tax the interest yang you bayar untuk loan itu boleh potong daripada income tax. All right. So that is why they like to take loan. Otherwise, that means this loan is free lah. It's free, no interest at all. Because why? Instead of paying the government income tax, you potong daripada apa yang bayar. That means when let's say he got to pay 1,000 ringgit to the lembaga hasil lah. Now he no need to pay 1,000 ringgit. Dia akan keluar potong 300 ringgit daripada sana. So better, So that is why they take loan. You see, that is why they put it separately. Then hire purchase. Ini bayar untuk apa? Van, Remember the van. Okay, again you put the interest separately, right? Okay, then total cash outflow is what? 19,091. Remember? 19,091. Cash surplus is how much?
900.
How much cash surplus you have?
909.
900. That means 20,000, is what the money that is come in, right? And then from there they have 900 ringgit. Okay lah, at least you got 900 ringgit. Now beginning cash is what? 30,000. Remember? From here we take the 30,000. This is the ending. Before you start the business, you got 30,000, right? 30,000 come minus the ending cash balance is 309. So this is the ending cash balance, right? Now go back to February now. Now let's say February. Again, February, you got 20,000 sales. Very good. Okay. Now, again, the same kind of thing. All the expenses are there. Same. 900. So how much from here? 3,009 masuk ke sini. 30,900 minus of the 900, 31,000. So it goes on every month. If it does 20,000 sales every month, they have a total cash of what? 40,000 cash flow in the account. Ini lepas bayar everything, salary dah bayar, tax dah bayar. Ini tax dah belum kira lagi lah. Okay, they haven't kira tax lagi. So all bayar already, they are 40,000. Now, is this good for business? Hello?
Yes,
Good.
It's good. At least you tak utang lah. It's not running negative, because he's doing cash business, is it? Now, if he goes into this thing, then different. Like my business just now, when I do the cash flow, 90 days only duit masuk dalam. So sini semua akan, I'll be sangkut lah, right? So this is a cash flow. Now, how much cash he has end of the month, end of the year? How much he has?
40,000.
40,000. Yes, 40,000. Look at my one, 40,000 he has lah, right? Okay. So now you do for the same thing for the year 1, year 2. So that means you see year 1, 40,000. Then year 2, 76,000. 145. So his cash is becoming more and more. So over the years, when the business is going on, the cash in the bank becomes lebe. There are also a lot of companies. When you look at the analysis of the company, you find the cash in the bank, like companies like Genting and all that. They got a few $billion in the bank. This where they get is from all these cash. Minus of every expenses that they have, they got this much of money in the bank. So this is called a cash flow statement. Now, will you lend money to a company like this? Will you lend money? Yes or no?
Yes.
Yes. Okay. They're good.
Yes, sir.
The cash is organized very good. Very well. They organize the cash. Again, this is projection. Every month got 20,000 sale coming inside. We don't know. Sometimes might be hard, good, bad. Actually, if you really look and see, you cannot put every month 20,000, How about certain months slow? Isn't it? So if I am giving money, loan, I will look and say, kawan, macam mana boleh 20,000 setiap bulan ni buat 20,000 ke? Macam mana? How about certain months that is slow season? Okay? How about that? So you have to, you can question this, So he should actually put what? Ini up and down, then it looks more realistic. Kalau macam ni you buat, people think, siapa pun boleh buat ni, 20,000, 20,000, 20,000, 20,000, macam tu kan? It's not this thing. So you must be able to be critical and think and say, I think it's not proper, how is it simply write like that? Okay? So this is a cash flow statement. Okay? Now let's go to the next one. What's the next statement? Is the income statement, right? Remember I told you the income statement is the profit and loss statement. Another name for income statement is profit and loss, okay? A pro forma income statement show the expected profit or loss for the planned period, usually 3 consecutive years, 3 years, okay? Now, generally it consists of cost of goods manufactured, gross profit and net profit, okay? So let's look at the income statement. Now, remember we look at the sales, right? Here, how much is it? Every month 22,000, 2,000, right, isn't it? Sales, 2,000, 2,000, 20,000, 20,000, right, isn't it? So 1 year is how much? 1 year is how much? You see the total here? How much is that 1 year?
240,000.
240,000. That means this company, every month the sale is 20,000, and all the sale is cash. So this is good. It's a cash business, It's a cash business. No credit, tak ada hutang, 20,000 coming in. So that means now we are looking at the income statement. That means 240,000 is coming in first year. Sales is how much? Cost of sales. What is cost of sales? Remember cost of sales. What do you mean by cost of sales? What is cost of sales? In order for you to sell something, you have to spend something, right? Isn't it? Now look back here. Look back at your cash flow statement. What do you see here? Where is the money going? In order for them to sell, where's the money going out? You look at the cash flow.
Buy the
Expenditure is where?
buy the materials.
Commission, yes, very good. Buying the raw material, like commission, you pay 1,000, 500 you pay. Now let's look at the year total, yearly total. Commission is what? 12,000. Okay, 600,000 for what do you call entertainment allowance. Operation raw material 36,000. Here is what? Operation overhead is 24,000. Administrative. Can you calculate these things? How much is anybody can calculate? 12,000 plus 6,000, 36,000, 36,000 plus 24,000. Can you calculate this? How much is that? 12 plus 36, 36 and 24. 24, well, 36, 36, 36. Okay. That will be the total here. That should be the total over here. 94,000. Can you see that? The cost of sales is 94. They mean what they do is they calculate in order for them to bring the sale, what is the cost? I must pay the salesman, I must pay this one, all that comes to the cost of sales. That means if the sale is done, this cost is there. Right? Now, expenses, now this is called the gross profit, or in some terms, GP, they call it gross profit. Gross, Why they say gross? Gross maknanya kasar. Kasar. That means untung yang kasar. Belum tolak lagi apa? You haven't tolak lagi apa lagi?
Your cost.
We have administrative expenses, right? Marketing expenses, depreciation charges, miscellaneous, so we have some other extra things. Let's go back again to here. You see this? Sorry, you go back here. Can you see administration expenses 60,000, salary and wages, 12,000 EPF SOXO, 24,000. Yeah, add this for 91,000. Okay, all these are what you call administrative expenses, right? Okay, so profit and loss. So a profit and loss basically will tell you what is the sale coming, what is the expenses, and then you see, look at it, 123,000 operating income, and then financing expenses. Financing is all the loan installment you're paying, the loan installment, everything, right? 4,500. Interest on high purchase. High purchase for the swap. 6,100. Net. How much is the profit? 15,400 is the profit. Okay, there's year one. Year two, the sales has increased, Yeah, increased sales year increased for the second year. Last year was 240. Now they put a 10% increase. I think about 10% increase sales. So now its gross profit is 172. Okay, now the profit is higher. Year three is 70,000. Okay, now is the company profitable? Is this profitable?
Yes, sir.
Yeah.
Yes, sir.
Okay.
Yeah.
So from the
Yes.
again, of course, this is projection. This is just projection. Belum lagi tentu dia profit. Now, ini projection. Daripada projection yang dia buat, we understand that is slowly increasing. The sales from year one to year two, the sales is increasing, and is showing profitable. So this is a profitable company. All right. Okay. Now, you might not really understand these things, but what I want you to do is go through the slides, all these things there, and study this because it's very important. I'm also trying to record this so I can put it up on YouTube. You can watch this later on when you're going to really do your assignment. You can watch this video, and see how this whole entire financial planning and the business plan is developed. Okay. All right. And then the next one, all right, we call it the pro forma balance sheet. Okay. Now balance sheet. Now 3 statements. First is cash flow. What does the cash flow tell you? What story does it tell? Cash flow. What does the cash flow tell you story?
How much the cash is flowing?
Yes, I see. How much the company cash is there at the end of the year, end of the month? Can it obligation for cash? Can they pay out or not? Is it? Whether that is there, it tells you the story. Profit and loss tell you whether the company is doing sales or not, and whether there is profit or not. Okay, so it tells you the profit and loss statement, tell you whether the company is making sales, but it doesn't tell you whether you got money or not. Which you got, if you want to look at that, you got to look at the profit and cash flow statement. I mean, what you need to do is you need to have these statements side by side. Tengok sini, tengok sana, and then you say, hey, ini cash ada. Oh, okay, ini profit, oh, ini profit ada, tapi tengok cash, cash tak ada. So you need to look at it side by side, not thing. So important. And the third one is balance sheet. Okay, now balance sheet is a different story. Okay. Balance sheet is when you talk about the cash flow statement and you talk about the the P&L, profit and loss, is for a period, 1 month, 1 year, 3 years, 2 years, kan? So it tells you the thing. But a balance sheet is different. A balance sheet will tell you at point today, at this time, it will tell you, because balance sheet will keep changing from day to day. It is macam gambar tau. Macam hari ni I ambil gambar je. Esok saya ambil gambar lain. Muka saya lain sikit, ada janggut maybe, and third day I take, maybe lain sikit. So it's like a picture of the business, So it tells you what is the asset.
Okay.
Apa tu asset? Tengok sini, asset. Asset is what? Fixed asset. What is fixed asset? What is fixed asset? Hello? What is fixed asset?
Your property.
Yes, your fixed asset is something you cannot move lah. Right? Fixed asset. That means, for example, you have a car, you have a house, you have property, you got machinery, land, all that is fixed asset. Okay, fixed already, right? Then you have something called a current asset. What's a current asset? What is current asset?
Cash.
New asset to buy.
Pardon?
New asset, sir. New.
No, the word current asset doesn't mean it's new asset, but it's asset
Is it a cash?
that you can actually convert into get cash. Fixed asset, kalau kita nak jual rumah dapat cash, ambil masa, maybe 6 months, 3 months, 6 months, right? Current assets are asset that you have, asset kita yang boleh dibuat duit cepat. Okay? What are the things that you can immediately change into cash? Let's say you're having a business.
Share.
Pardon? Yeah, Haryanti? Stock. Yeah, very good. Stock, right? Stock you have can immediately change into thing. Even raw material also is current asset. You can sell. Let's say tomorrow bankrupt, you boleh jual balik, jual, is it? Tapi rumah, machinery susah nak jual, lambat lagi sikit kan. So current asset means is what you call cepat you boleh dapat. Current ini cepat lah. Actually the name is wrong. Current it should be fast asset maybe or slow asset lah. I don't know. So current asset means is something that you can change fast. Cash in the bank, FD. Okay, all these are called current assets. Okay, current assets, right? It could be inventory. Inventory, yeah, is current assets, right? So a business has got two types of asset. One is fixed asset, which take a long time for them to sell and get back money. Current assets is something that take short while. And then, okay, let's say for example, people utang you duit. What is that? Let's say for example, people utang you duit, like a customer utang you like 90-day credit card, they owe you money. What type of asset is that?
Current asset. Current asset.
Current asset, very good. Is it? Because it's something you can get back. It's yours. You can get back. No, maybe now you don't have, but you can get it back. Is it? So that's called current assets. All right. Okay. The fixed asset and current assets. Right. So in your balance sheet, you're going to write down what is a fixed asset and what are the current assets that you have. Is it? So assets. And then the owner's equity. Remember, equity means what? What is equity?
Yes.
Share. How much of money that you have put in? Is it your money that you put in? Is it? And then the third one is what? Liability. What is liability?
Hutang.
Debt.
Utang. Very good. Liability means utang. Just write down the word. Liability means utang. Again, liability ada dua jenis. Current liability and long term. So current means apa? Apa maksud dia current? Remember in accounting, current means what?
Pay monthly basis.
Sasi?
Pay monthly basis.
Yeah, which you need to pay quickly. Maybe monthly, installment you have to pay, is it? Or not say installment, you utang orang. For example, supplier. You borrow, supplier send you the barang tapi you tak bayar. You tell him I'll pay you after 90 days, right? That's called what? Current liability. That means you utang, but it's current, you have to pay back. Then you have long-term liability. What is long-term liability?
Yearly.
Loan.
Loan. Okay, like tadi term loan kan? High purchase loan is long-term. You take for 5 years, 10 years, so it's a long. So liability. So a balance sheet will tell you what is the situation of a company now. Jadi berapa aset dia ada, hutang dia ada. So tengok, aset banyak, hutang banyak. Kalau hutang dia banyak, aset turun, is it good? Not good. Right, isn't it? Tapi aset ada banyak, tapi liability kurang, so it's okay. Right? It's all right. Is it like that? So this will tell you what is the health of the company. Okay? If let's say the company go bankrupt today, bolehkah dia bayar balik semua hutang dia? So this is what will tell you. The balance sheet will tell you what. So that is why balance sheet is based on today date or tomorrow or what particular time. Is it? It is not for a period. It's for one day or one particular. It's a snapshot. Okay. Now the balance sheet follow the following equation. Remember this equation is very important. Asset is equal to owner's liability. Equity plus liability. Okay? This is the formula we use. Asset is equal to owner's equity plus liabilities. Right. Okay. This is an example of a pro forma balance sheet. Okay. The same company. Yeah. Let's look back at the same company. Remember, land and building. This guy, he put his own land and building. Do you remember that? So 45,000. He put in the land and the building, his own one, right? So that is asset. Is it current asset or fixed asset?
Fixed asset.
Fixed asset. So all these sections, tengok, ini semua dipanggil non-current asset or fixed assets lah, right? Non-current. This is all current assets, All right. So now land and building, machinery equipment, he bought 18,000. All the equipment he bought, right? Furniture, remember 5,600. Renovation 3,200. Actually, renovation is higher, kan? I remember 7,000 renovation, right? Vehicle is 20,000. Okay. Deposit is 800. Deposit is also fixed asset because what deposit is this? Do you remember what deposit is this? Deposit untuk apa ni?
Bomba.
Right? Very good. Right. So you
TM.
So all these deposit is your asset. The base is you already put inside long term. This is called the book value. Book value means it's an actual value now lah at the moment. Is it? Because value will keep increasing, decreasing sometimes, right? Isn't it? So if you see here, can you see this one? 18,400 and then 13,000, then 9,000. Kenapa dia turun pula? Machinery ni. Ini, kenapa dia turun?
Depreciation. Depreciation.
Yes. Okay, now this is a term called depreciation. That means the value of your fixed asset akan turun. For example, you buy a car today, beautiful car, 70,000, you go and buy a car, is it? What's that? What car is it? 70,000? I got 70,000 car. All right, let's say you buy a Honda City for 70,000, like, all right? Next year, you want to sell the car. Can you sell for 70,000 or not?
No.
No.
Yes or no?
No.
No.
Yeah, how much can you sell for?
No, sir.
Huh?
40, 45.
Maybe you
Follow
can jual
Around
current
60,
market
around
price.
60.
60,000 maybe 60,000 very good already 70 you believe.
Yeah,
Next,
because
you jual
it's become a second car already.
second-hand car, right? Isn't it? So
Yeah.
next year, they mean you would have lose. How much you lose? Maybe 20,000 lose. You know, this is called
Yes.
depreciation. Okay, so when you buy machinery, every year will depreciate. But it's okay. The value that you amount you have depreciate, you can minus off from income tax also. All right, so no problem. That is why you see dalam company orang beli kereta mewah tau. For example, they buy BMW. You know, BMW you beli mahal sangat macam gila 500,000. Tapi dah jual 100,000, you know, you lose so much of money, right? Isn't it? But because you lose the money, is depreciation. So when they sell the car, the amount that they lose, you know, you can minus off from your income tax. So that is why you find big companies, corporate, dia punya CEO, dia punya manager semua pakai kereta besar-besar macam tu, tau, you know, is it? Because why they don't bother? You know, because if they sell, if they lose the money, because of depreciation, they can minus off from where? From income tax. Okay, so that's why. But if we working, you know, staff, we buy, kita pening kepala, we cannot minus off depreciation from income tax, you know, is it? So that's why in company, there's a benefit. It's what do you call these things? All right. Then, okay, furniture also turun. Tengok, renovation pun turun. You know, and vehicle pun turun dah. Tengok, kereta pun turun, right? How about land? Never go down. Why?
Increase. Because
Land never go down. Why?
Land always appreciate.
Appreciate. Actually, it should go up lah. 45, maybe next year 50, then next year maybe 100,000. I don't know lah, right? But here they put all same lah. Land, because land and building will not depreciate lah. You know, will always appreciate. Okay, so that is what you call a balance sheet. So now we know it's an asset. Yeah. So in the first year we are looking at asset in 93,000 is asset. Current assets are inventory of raw material, finished goods, and cash. Remember, I told you these are all you can immediately change into cash. It's called current asset. Current asset are those that you can change into cash immediately. Ini nak tukar kepada cash ambil lama. That's why it's called fixed asset or non-current asset. Okay. Then it comes to how much? Total asset is 139,000. Remember the formula is what? Asset is equal to owner's equity plus what?
Liability.
Liabilities. Okay, so 139,000. Now, owner's equity, remember how much the money the business owner put in? 72,000, right? Remember? It's his own money, you know, not borrowed from bank. And then the profit, remember the profit that is coming? Accumulated profit? 15,000 that was there, you know, in the profit there, right? When you look at the P&L, was it there? The P&L? Yeah. Remember this one? Look at this one. Can you look at the first year profit? Berapa? 15,400, kan? All right. So this profit you must this here because that is asset. Profit is asset, kan? Okay. Profit is asset. So now you add the 15. Where are we? This balance sheet. Okay. You add this 15,400. You add it comes to 87,900. Okay. Now. Liability is how much? Loan. Term loan is 36,000. High purchase is 16,000. This one also going down. Why is it going down? Can you see the loan also going down? Why is it going down? Hello?
Because you're paying.
Yeah, you're paying. Very good. You're paying the loan, so the loan is going down. So next year, become less. Okay? So now you look and see. This 139,000 should be equal to this one plus this one. Okay, so this is the example of a balance sheet. Okay, now from here you look and see here. Now you can actually look at this and find out whether the company is healthy or not healthy. Is it good? Is the company healthy? Is it healthy?
Yes.
Yes.
Yes, good.
Okay, because you look at the asset in 93,000, but loan is how much? Liability is how much? 52. Isn't it 52? Right? Isn't it? Okay, so that means you look and see the asset is lebih daripada very much higher than the loan. So the company is quite okay. All right. Now, this is called the balance sheet. The balance sheet will tell you what is the what do you call this thing of the company. All right. What is the value of the company? Kalau kita nak jual company ini sekarang, kalau kita nak jual this company, they will normally look at the balance sheet. Okay, daripada balance sheet kita boleh tahu apakah aset yang ada dalam this one and berapakah what do you call loan yang kita ada and then equity that you are putting lah. So this is called a balance. So the year 2, year 3, we do it for 3 years lah. Is that clear? All right. So balance sheet is for one particular time. Now they should actually put here as at 31st of December. You should put at 31st of December. Okay, because in the beginning of the year, dia bukan macam ni. Sebab belum masuk lagi all the, what do you call, other assets, right, isn't it? Okay, the profit belum masuk lagi. Year end saja all the profit masuk kan. So, you should be at 31st of December. That is what you should. Okay? Now, let's look at the next one. Financial analysis. This is wrong. Should be this way, right? Financial analysis. That means you're analyzing the all the things. Now, when you look at all these statements, the next step what you do is called you do ratio, and the ratio from the ratio you can find out whether the company is strong or not good by looking at this. So when you go to banks, banks will normally do this kind of testing line, right? And we're going to look at this testing. Okay. Now these are the testing that they do. Liquidity ratio. Let me see. Liquidity ratio, efficiency ratio, profitability, and solvency. Okay. Now I'm going to run through this because it's not too, it's a bit too deep for you all maybe, is it? But you need to understand a little bit about this. Liquidity ratio is will tell you, there are two types: current ratio and quick ratio. Liquidity ratio will tell you if the company go bankrupt, they have cash or not. Itu yang liquidity ratio. So macam mana dia buat tu? It's like this: current asset divided by the current liabilities. Okay, current asset divided by current liability will give you, if the ratio is less than 1, then is serious liquid position. More than 1 is good. Okay, now let's look back here. Let's look back at the P&L. Now, what is the formula? What is the formula it says? Do you remember the formula? Can you write down this formula, please? Current asset divide by current liability. Write down current asset CA divided by CL. Current asset. So if it is less than 1, no good. More than 1 is good. All right. When you talk about the word liquid, liquid means cash. Liquid means cash. When you say a company liquidate the company means they mean tutup the company and dapatkan cash balik. So liquid means cash. Liquid. Yeah. Now let's look at this company. Let's look at this one. All right. Let's look at the first year. From here, is the company, let's say you do this ratio, liquid ratio, is it more than 1 or less than 1? What is the current asset? What's the current asset? What is the current asset total? CA.
497.
What is the current asset? 46,900.
Yeah.
46. I mean, current means if let's say the company tutup sekarang, you cannot sell the land, you cannot sell the machinery, ambil masa lambat. Tapi sekarang apa yang you boleh jual sekarang, you have the raw material, finished good, cash in the bank. These are things we can sell lah, right? Isn't it? How much is it? 46,900. Divide by what? What is the liable loan? What is the liabilities? How much is the liability?
2,000.
52,000.
52,000.
Divide and see. 46,900 divided by 52,000. What do you get? Take out a calculator. 46 divided by 52,000.
0.9.
Okay. Now 0.9. Now is this company, is it good or serious liquid situation, good liquid or not so good?
Not so
Not so good.
Not so good, sir.
Okay, they mean if the company closed down immediately, they don't have enough money to buy up all the utang and settle everything. You see? All right, so that's body. So when you are giving money bank, now let's say you are the bank, you look at this situation, you will say, hey, sorry, not very good lah. Suddenly your business bankrupt already, cannot do anything. Macam mana you nak bayar? Tengok daripada ratio ni, I tengok you are not very good lah. All right. Then there's another one that's called current ratio lah. Another ratio is called quick ratio. Quick ratio is current asset minus the stock and current liability. Now let's look at that one. Let's look at that one. Current asset. Now let's look at current asset. What is the formula? Current asset. Current asset minus stock. Stock divided by current liability. Okay, what's the current asset here? Yes, sorry. Is it correct? Yeah, I'm the right slide. Okay, bukan lah. Ini wrong statement. Sorry. Okay. What is the current asset now? 40?
4,900.
46,900.
46,900. 46. This is the current asset. Now, what is the stock? How much is stock? 3,000. Inventory of finished goods, 3,000, right? Isn't it? Now, why they say stock means, because if let's say, for example, you already got the finished good, inventory is there, but sometimes want to sell the inventory also will take time, isn't it or not? What is really you can actually get liquid is cash. Even raw material also you cannot sell, isn't it? You can't sell the raw material also. So it means 6,000, is it? That means the only amount is 40,900 is the only amount that is, you can immediately distinct. So what is the total amount? What is the ratio? Is it 1 or so? That means 40,900. Sorry.
46,000.
46,900.
46,900 is close to this one. It's this one. But now you must minus off the 6,000 because inventory you cannot sell immediately. Mungkin ambil lama untuk jual. Raw material pun orang tak nak beli macam mana? You ada raw material semua you simpan dan orang tak nak beli pun tak boleh kan? Okay, so let's say you this 6,000 you tolak daripada 46,900. How much is balance? 40,000.
40,000.
So 40,000 divided by liability berapa? 52,000 berapa?
2,000.
How much is that? Is it less than 1?
Yes, less than 1. 0.78.
Even worse, 0.7, right? Isn't it? Now let's look at the next year, second year. Let's do a quick ratio. Quick ratio is what? This one, current asset now. You look at the current asset is what? 85,000. 85,000. What is the loan? Total loan is how much? 39,000. Can you divide 85,000 divide by 39,000? Can you divide that? Is it higher than 1?
2.18.
Yes, 2.18.
2.1. Very good, ready. They mean the first year is margin, They mean minus 0.9. Kita tengok. Second year is good. Third year even better. You see? So they mean the company is improving. Liquidity is becoming better. First year bankrupt susah. Second year kalau dia bankrupt boleh, dia boleh tahan. Sebab apa? This is good. So this is how you analyze, companies, daripada balance sheet. For the balance sheet you can analyze that. All right. Okay. So let me just finish this off. Okay. Now there are a lot of other ratios that are there. You have the I told you about quick. Then you have the efficiency ratios. Efficiency ratio is like cost of goods sold, average stock, credit sales. Now, what I want you to do as a homework, go back and do these ratios. It's very easy. You can see all the this thing there. Is it? Now here in this company, the credit sales is not there. Everything is cash, right? Isn't it? So sometimes when you're doing credit sale, this is what you got to do. You got to check and see whether credit sales is how much, debtor is how much. Is it? So you have receivable turnover, all right? Then you have to look at gross profitability ratios. We have one more solvency ratio. Okay, so these are the different types of ratios that you have. Okay, in your stigma. All right. So okay, so we have covered the the financial listing. Now, just to review what is the financial listing. Let me just go back again and review this one. Okay, now we looked at it and say the financial plan is one of the most important part of the plan, most crucial aspect. Okay? You do the financial plan only from where you get the budget for marketing. I mean, how much you want to market the product, budget for marketing. Organization plan, they make administration staff salary, berapa semua dah kira baru, and then operation, raw material berapa, all those things add together, baru you can do the what do you call the marketing, what do you call the financial plan. Okay, so the financial plan consists of, we looked at it and see, you know, there are process of developing the plan. First of all, gather all the input. Okay, then what you do, first of all you prepare the project implementation schedule. Implementation schedule will tell you how much is the cost of the product. Okay, we looked at an example of a company where they have, so in a implementation schedule you have the capital expenditure, working capital, and other expenditure. What capital is those who are land, property, machinery, furniture, renovation, all that is capital expenditure. Okay, working capital is money that you need, you know, for running the business, like marketing, operation, salary, administration, you know, and raw materials, all that come under what you call working capital, right? Raw material don't come under capital, it comes under working capital, right? And then you must check and see how many months, maybe you want 6 months, you know, right? So depending on the industry, if it's a cash business, then maybe very fast, 2 months is okay. But if it's where you have credit, then you need a longer period as a working capital. Then we have other expenditures. So first thing that you need to do is the project implementation schedule. Okay. And second, you got to look at, explain to them the source of finance. Where is the money coming from? Is it coming from equity? Remember, we talked equity means is share of the partner, right? Or is it coming in from finances, from bank loan, high purchase, term loan, right? So write it down. So much is there. So it's clear for the people that you're borrowing that I need to borrow only 65,000 from you. So from here they understand that. Then next, what do you do? You look at we looked at the cash flow. So we saw that the cash flow statement is very important because why? Cash flow will tell you the actual story, you know, whether the company has got cash enough to run the business or not. Many businesses run into failure because of cash flow issues. They're not able to handle the cash flow properly, manage the cash flow. All right. So it's very important. Cash flow is one of the most important statements, right? Then this is an example of a cash flow statement. We saw how the company manages the payment of cash flow statement. Okay, and cash flow statement can be done for monthly, can do for yearly also, right? And then you come to the what? Pro forma income statement. Income statement is profit and loss. The formula is profit is equal to sales minus the expenses. Okay, so over here, what you do? You write about the sales. Okay, and then minus the expenses, and what is the net profit? Okay, we look at it this way. So this is the pro forma income statement. Now, in order for you to understand the company clearly, you know, whether the company is healthy or not healthy, you need to look at both the statement together. You need to look at this income statement where it tells you the company is making sales, is growing. All right. Now, then you also got to look at the cash flow, whether the company is able to manage the cash correctly or not. Right. So that's also very important. So these two things plays a very important role, you know, in order for your financial projection. Okay. All right. And then we look at the next statement, which is called the balance sheet. Okay, now balance sheet is different from the first two statements because balance sheet is for a particular time, right? 31st of January, one day. Because the 1st of January maybe might be different already because asset can change. Your land value can change, you know, every day it can change. So that is why a balance sheet will tell you for one particular time. Because next month maybe your liability is kurang. Because you already paid in loan already, installment paid already. So the loan dah kurang. So your balance sheet akan tukar daripada day to day. You know, so when you do a balance sheet, it must be of a particular date or particular time. All right, it's a snapshot lah. Okay, the formula is asset is equal to owner's equity plus liability. Right. So we looked at the example of pro forma balance sheet, right, where you have the current assets here, and then you have non-current asset and current. So you divide non-current and current. Non-current are those you need to pay, you cannot get back cash immediately. Okay, if you want to sell, you cannot get back immediately. Current asset are those you can convert into cash dengan cepat. Dalam satu bulan ke, you know, you're able to, you know, settle that. So it's called current asset. All right. So with raw material, finished good, and cash in the bank, all these are what do you call, you know, current assets. Right. Then you look at equity. There is a capital that is put in. Even profit will go into your asset for you. Long-term liabilities are the liabilities like installment and all that, right? Is a liability, right? So we looked at the thing. So 3 different statements. Now, after you do all these statements, you need to do an analysis to see whether the company is profitable or not. So most banks or lenders, what they do, they will do some ratios. Okay, so the ratios are basically on liquidity ratio, efficiency ratio, profitability, and solvency ratio. So these are the different ratios that they will see. Okay. Liquidity will tell you, we saw an example of liquidity where it tell you whether the company is liquid or not. What does liquid mean? Liquid means whether you can convert into cash back. Okay? Whether the company sell it, jual, tutup, can you get back cash? How much cash you can get? So from here you find out when we saw the example, the company is okay, but in the borderline lah. Second year is all right. Third year it become better. The liquid ratio is becoming better. So we analyze companies in this way. All right. Now, we don't have the time to go through the efficiency, profitability, and solvency ratio, right? But in your business plan, I would like you to do at least one ratio, liquidity ratio. I think that's the most important thing, right? Do a liquidity ratio. You don't have to do all these things, but you can read through and get more what you got for your knowledge. Right? Okay, is it clear what you learned today? Hello.
Yes.
Yes, sir. Clear.
Right. Okay. Now, it might be a lot to you, especially if you're not from accounting background. It might be difficult for you to understand the whole entire thing, right? But it's okay. It's good because, you need to expose yourself. As a management student, you need to expose on what is the whole entire, idea behind, accounting. Okay? You don't need to go and do, all the balance sheet, ataupun profit and loss. No need. You must be able to read and see whether the company is good or not, right? Now, what I would recommend you is, in order for you to get more experience on this, you can download all the statement. You see, all the public listed companies, for example, Maybank and banks, all of them, if you go to their website, they already have what you call a statement surat. Every year, they have to publish the statement in their website. Right? So you can go and download this and budget and think, analyze and see whether this company profitable or not. Right? So normally in accounting classes, what they will do is they will ask us to bring account, and then you analyze and see whether the company is good or not good. Right? So as a management student, you need to know these basic idea, because tomorrow you will go into higher management. Maybe you're going to become a CEO of a company, or maybe you're running your own business also. So it's important for you to understand these things, and you can analyze and find out, are you going wrong? Any problem from these areas. Okay. All right. Okay. So we take a quick break, and then we will start with the next chapter. All right. After 5 minutes, we come back, and then we'll finish off the next two chapters. A few chapters are there: administrative plan, entrepreneur in family business, franchising, and issues on entrepreneurship. Okay. All right.
Okay, sir.
Okay.
Okay, sir.
Let's take a break, and we'll be back again live. Let me just pause the recording for a while. Okay. All right. So let's start again. Okay. In the last chapter, we look at the financial plan. Okay. The financial plan, like I mentioned, is one of the most important plan that that you have to understand. And in the business plan that you're doing, the financial plan is crucial, because from the financial plan, we really will know whether your business is viable or not. Okay? So we will know that. So it's very important. Okay. Now, remember in the financial plan, in the business plan. Okay. In the business plan, you have what you call when you look at the business plan. Remember, we saw there's one called administrative plan. Remember? Remember, we had the administrative plan, the business plan.
Yeah.
Yeah. Okay. Let me just do that. Remember, we have the administrative plan right here at the bottom here. Okay, we have the administrative plan. So we're going to look at the administrative plan. That means, for example, when you talk about administrative plan, it's about what? About talking about what are the different, actually I should copy this one, wait, I have one for administrative plan, the other one. So the administrative plan. Okay. So the administrative plan, what we're going to look at, what is the definition of a small business, characteristics of a small business, personal planning. All these are things that we're going to look at in this chapter. Okay. Now, some of the things that we're going to study here is basically going to be something that you all are quite familiar with, is it? So it's not going to be something out of the thing. For example, in financial and all that is something a bit out of your scope of work. But most of you are already working in this line. So all these things that we're going to cover here will be something that is quite simple for you to understand, right? So we're going to look at what is the definition of a small business here, and characteristics of small business, management functions, organization structure, personal planning, personal recruitment process, retaining employees, and administrative plan, right? So I'm not going to cover in detail in all these things. So we'll just run through some of the simple, parts of it, right? Now, definition of a small business. Remember in the early chapter, we look at it and find out what is a small business, SME. How do you define an SME? What is an SME? Remember, what is an SME? How many staff do you have?
Less than 75.
Less than 75, right? Isn't it? Okay, a less than figure amount. Okay, according to SMIDEC, the definition of a medium-sized industry, is small-sized industry is not more than 10 million, not more than 50 full-time workers, right? So, of course, this figure, this definition has been changed, and depending on the type of industry also. Sometimes in manufacturing, they call SME different. In other things, SME might be different, right? Okay, so basically, a small business is an enterprise engaged in trading activities. Or retail store selling consumer goods. Okay. Or the second definition, business entity that is neither owned by the public nor listed on a stock exchange. So that's called a small business enterprise. So when you start a company, you're going to start a small business. Okay. Now, common characteristics of small business are basically ownership is privately owned. Okay, most of it is owned by one owner or two owners. It could be a partnership, it's a sole partnership, or it could be a private limited company. So there are only three types of small businesses. All right. Okay, and then management is managed by the operator owner. In some of them, everything you got to do, they even sales he has to do, accounting is going to do, So sometimes very few, and sometimes they run by the family itself. Okay. The resources has limited resources in small business. Okay, highly dependent on the ability of the owner to generate the resources, because the owner is the main person to do the business. And they are the one. So a small business starts off in that way. Structure is flat structure and informal. Right? What is the flat structure? Flat structure means what? Give me an example. What do you mean by a flat structure? Hello? What is a flat structure? We talk about a flat organization. When I say a flat organization means what? What does that mean? Is anybody there? Not all there or what?
I think not. Yes, sir.
All not here yet.
No hierarchy, I guess.
Yes, there's no hierarchy. A flat structure is like this. Okay, where the president are all reporting to that. This is called a flat structure. A tall organization is something that is got we call hierarchical. You're right, hierarchical. We got levels, so many levels up. So when you talk about a small business, it's mostly a flat type of organization. The tall organizations are those big, huge companies, right? Which has got so many levels, that you got to meet up and talk to them. So they are not SMEs, right? Now, management, entrepreneurs actually need to understand and perform manager so that you don't fail. You have to understand what are the functions of management. Now, when you talk about managing a company, there are four main functions that we need to know. First is planning, organizing, leading, and controlling. Right? So these are the four areas that we need to that entrepreneur need to understand. Okay, right? The planning is of course the most important part. Where here you talk about the vision and mission and the long-term statement of purpose, all that. And then organizing, okay, how to organize the whole entire thing. You talk about activities, designing activity, and the organization structure, handling infrastructure and operation methods, leading them, okay, to be a leader. Like for example, you talk about Tony Fernandez, okay? So he's a leader, okay? He leads the thing. People gets things done. Okay? His type of organization, even though it's a big, huge corporation, but they try to make it flat, you know. Now, when you go to AirAsia office, how many of you have been to AirAsia office? AirAsia office. Okay. If we talk about AirAsia office, there are no office at all. Everybody is open. You know. The whole entire, you know, this thing is all open structure. Very open kind of thing. You know, everybody also don't have rooms, beautiful rooms and things like that. That's a kind of a what you call structure they have now. So what it does is, you know, it helps them in better controlling, you know, and it makes sure that everybody, you know, has got feedback and encouraging each other and working together. I think that's very important, right? And we have something called, you know, leading by what you call by motivation. It motivates the people, you know, and the people are excited about it because of the thing. So it basically, you know, entrepreneur just not to start the organization, but managing it is also very important, plays a very important role. Okay. Now, when we talk about organizations, okay, we talk about division of work. In organization, it must division of work. I mean, you must know who is going to do in what work, what function. Authority and responsibility. Who's got responsibility and who's got responsible for what particular kind of thing. Unity of command. Now, it's important that one person you report to one supervisor. You don't have two supervisors, then you kalanka board. So this is very important. When you design the organization structure such that one employee reports to one supervisor, not to two different supervisors. Okay. There are times, you know, in some huge organizations where you have, for example, if it's a multinational company, sometimes you report to the boss here. At the same time, you also report to your boss over there, you know, in the HQ also. So that's there. That is called what do you call? We call it a dotted line structure, right? Span of control. That means how many staff report to one manager. That's also very important. All these are important designs, you know. Sometimes too many people reporting to one person also cannot. It doesn't work, and it's not easy for them to manage it, right? So, and delegation authority, who does what. So all these are all principles of organization. Okay, different type of structures, you know. Now, if you talk about structure, you can structure organization based on shift. Okay, for example, you have morning shift, afternoon shift, evening shift, or you know, you can work based on shifts, you know, right? You can structure that in that way, right? Structure based on number of workers, okay, on a number of workers that you have. Structure on functions. Functions mean basically, for example, different functions, right? Okay, accounting, you know, what do you call operation is one. You know, what do you call marketing is one. These are all different functions. Right? So you can structure it. So that means, like for example, this operation manager, marketing manager. So this is an organization based on functions. Okay, you can structure based on products also. That's also another way. Like some companies, for example, okay, Hush Puppies, right? You know Hush Puppy, right? What do they sell? What does Hush Puppy sell? Hello?
Apparels.
They sell
apparels, shoes.
Okay. Now, these are two different departments, right? Isn't it? So Hush Puppy is structured in such a way. They got a general manager for shoes. They got a general manager for what do you call clothing? You know, for apparel. You know, so it's structured in such a way that each it's based on product. You know, so and then under that they have different. You have a accounting for product, accounting for what do you call operation for this one. So different, you know. So they mean what they do, they structure the organization based on products. Okay. But most companies, what they do, they structure based on function. Sometimes it's on shift, right? Especially manufacturing, you work on shift kind of a concept. Right? A region, that's another structure. You can also base it on structure, also on clients, right? Now, we looked at the administrative plan and the business plan, remember? Okay. In the administrative plan, now we're going to look at, you know, what do you put in the business plan or for when you talk about administrative part, what do you put? Okay, what are the components we're going to study here in this part, right? Now, in the administrative plans, it explains how routines are maintained and controlled. I mean, now you're in a business plan, you are giving a projection of how your business is going to run. Remember, it's actually a what do you call a blueprint, a guide. So in that, administrative plan comes in. The administrative plan tells that, you know, how the different section of administration is going to be maintained, right? So there are 7 parts, 7 parts. Let's look at each of the 7 parts. First is introduction. Introduction to the organization, you state the vision and mission of the business. All right. Okay. What is the vision of the business, mission of the business? We agreed that. Right. Next is the organization start. The organization chart, what do? You show how a business is structured. Right. Remember we saw, okay, who is it structured according to what you call product? Is it structured according to function? Remember the different structures. You find out what is the different type of structures that your organization you're going to come up with, right? And how is it this thing? And draw a list of all the what you call who is there and the organization chart. Do that. Second is manpower. List all the staff position and number of people for each position. Okay. Like for example, you're talking about accounting. How many people I'm going to have? Operations. How many people I'm going to have? Right. Marketing. How many people I'm going to have? So you have a planning for it. Okay? And only for administrative staff, not for those who are like operation, like running the machine and things like that. Those staff are wage earners. We talk about administrative staff. Okay. Schedule of tasks and responsibility. Then each person, what is the job function? Okay, what are they supposed to do? So it's clear that this person does this person does that, this person does that. Okay? One person is in charge of operation, one person in charge of sales, bringing in the business. Okay? One person in charge of taking care of all the accounts and all those hiring staff, HR, all those kind of things. We will look at those. We have to find out who is doing what. Next is schedule of remuneration. How much salary you want to pay for each position? What's the EPF, SOCSO? Those information you write that down. Okay. List of office equipment. Okay. What are the equipment that needed? Remember these things, this information you got to put into what? Into the financial part, right? Remember we had one section where you talk about implementation scheduler, where you write about what are the different equipments that you have for your office, right? Isn't it? Okay. So here we have now all the different equipment that you're buying, for the office. And then administrative budget. Okay, administrative budget is, in the administrative budget, you list all the costs under administration. Okay, fixed asset, monthly expenses, and other expenses. I mean, remember this administrative budget is what you're going to put into when you create the. Remember we talked about the three things, right? One is operation, marketing, and administrative. Three things. That is how you come up with the financial plan, right? So the administrative plan, administrative budget, will list all the three things together. Then only you can create your financial plan in the end. Okay, is that clear now? All right. So this is called the administrative plan. All right. So okay. So what I do, I stop the recording of the video. So from here onwards, you can actually after this is not relevant to your business plan, right?